Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, March 19th, 2013. Well, a continuation of the trend to the downside today in a candle that's made a lower high and a lower low. Black body candle once again, so the sellers have still continued to make net bearish progress on the day between the open and the close. But some concern because the amount of progress that they've made is less than half of the previous day. So the sellers attempted to build some momentum for the previous day's trading, and here today quite a bit of that momentum in net terms has weakened, and that does suggest that there is a possibility of a change of trend to the upside. Now, if we look at where this market closed today, it's closed roughly around the midpoint level but slightly above, so really neither the buyers nor sellers have strong control, and if anything the buyers have taken very weak control of this market, so that does suggest that there is a possibility of this trend not continuing to the downside. But the fact that we have this spinning top type candle with downside price rejection and upside price rejection has set this market up for a change of trend to the upside. Spinning tops are candles of indecision, and it's because the buyers weren't strong enough to close the market up at the highs and sellers weren't strong enough to close the market up at the lows. So basically this is a story of weakness in the sellers, not a story of strength from buyers. So that's why there is potential for a change of trend. So it's very important tomorrow moving forward for us to watch this 1555 level that's roughly around the high. In the recent past it has held as resistance, and today it has held as resistance to this market being rejected from there. But if we do see the market break up above there in a bullish manner, then a possibility of the market testing 1563 and then even up to the 1576 level. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down. And here today we're seeing the market rejected from the 100% level, and that does set this market up for a potential change of trend, and it suggests that there is a good potential for a change of trend. So even more so, we should be watching the high of the current candle. If this market does trade through that level, and it just doesn't look as though it's going to do it, but there is a possibility if it does, then the 161.8% level should provide very, very solid support. We have the Kijun-sen trading in that area, and the 161.8%, as I've mentioned, at 1525. We also have strong price rejection there from these two candles in the recent past, and we know that resistance can turn into support, and that's a level that we certainly should be watching if the market does trade down. In terms of the Fibonacci retracement of the prior uptrend, and here today we're seeing the market rejected from the important 38.2% level. As I've mentioned, the sellers have really lost a lot of commitment down around this area. It has set this market up for that change of trend, and let's watch the area around that high. Also, just looking ahead, if the market does continue trending down, 61.8% level, 1525, coinciding with the Kijun-sen, the high of these candles with a strong rejection and the previous Fibonacci technique, does suggest that if this market does trade down to there, it will provide very solid support. Now, in terms of Ichimoku, a bullish market in a bullish market in the long-term time frame by trading above the cloud, and also bullish in the medium-term time frame by trading above the Kijun-sen, and that Kijun-sen is pointing flat, and price action has been attracted back towards it, flat Kijun-sen. So time after time we see that happen when the Kijun-sen turns flat. But if we look now at the short-term dynamics in this market, the sellers are no longer supporting the trend to the downside, even though we have had a breakout down below the Tenkan-sen, and technically this market is bearish in the short-term time frame by trading down below there. But we haven't seen a strong bearish close down below there, and this does suggest that in line with the higher time frames, that the likelihood is that the market will trade back up to the upside and change the trend to the upside. As I've mentioned already, however, 1555 will be a strong resistance area to this market, and if we do see strong bullish trading up above there early we could easily see a test of 1563 and then perhaps beyond tomorrow, and perhaps a test up to 1576 over the next few days.